Hi, everybody. It's that time of year again, the time that many of us decide where we're going to be giving our money to charity, how much we'll be giving, and how to make the donations. So today we're going to be sharing our ideas on how to give wisely and maybe save on some taxes too. Pam and Terry, maybe you want to start and tell us, how do you make your decisions about charitable giving? And are you thinking about it any differently this year than last year?
Let's put it in a little bit of perspective, Richard. 9 out of 10 people don't itemize ever since the tax changes that went into effect in 2018. So I'm not terribly sure that for most people, taxes are a big consideration, but we've got some really good ideas if they are. However, it's really interesting that Giving USA reports that Americans are the most charitable people on the planet. And last year, they gave over $557 billion to charitable organizations. So let's start by saying you want to talk with your tax advisor. The standard deduction for 2024 is $14,600 on a single return, $29,200 on a joint return. And after you have other deductions that could come maybe from medical expenses, or if you have a huge mortgage, for example, there's some other things that you can deduct. It might pay to itemize your taxes. But even if you aren't itemizing and taking a deduction, the real benefit of a charitable contribution is not so much your taxes as the really good feeling you get. I do that, but let me turn to Pam and say, any thoughts on how you think about charitable deductions,
Yeah.
contributions?
I want to share that. I want to ask both you guys, what do you do? Do you have like one particular charity that you like to make donations to repeatedly because you know them really well, or do you like to spread the love?
Well, for me, there are a few that I like to give to charity every year, and I've been doing that to the same charities for many years. But there's a couple that I just started giving to in the past few years because I know more about them. One of them is a place that I volunteer at, and I like what the work that they do, and so it's become more personal for me.
Yeah.
How
Yeah,
about you?
I tended over many years to give to the standard organizations that I knew for sure were doing good things. The community organizations, or ones that relate to diseases or illnesses that people I know have asked me to contribute to, and things like Alzheimer's and so forth. But over the last 4 or 5 years, I've actually grown into sorting out the charities that I personally feel related to, and mine all revolve around horse rescues,
Yeah,
saving horses
that's see
from
that
going to slaughter.
I kind of look at it the same way from a really personal point of view. And I know that the reason that we say this is the time of year is because that's kind of a tax-driven thing. For me, even though I know that my accountant's going to make sure that donations are on the list and all of that, I'm not as time-driven as much as I am really motivated by what I'm seeing. So that I really, I mean, I care about a lot of things, but I can't donate to everything. But so I tend to have a handful of charities that I like to support. A couple of them are national, a couple of them are local. But so normally I split it up. But this year, what's different, Richard, for me is I'm going to focus this year on, I have been focusing, and before the end of the year, the local ASPCA is raising money to upgrade their facility. It's a big expense. I can't donate a big chunk. It's a no-kill shelter, and I have to go with my heart. So that one this year versus splitting it up is where where my heart is.
Wait, Richard, let me get in a plug. I mean, just in case someone perked up their ears and said, wait, they slaughter horses. They send thousands of horses to Canada every year to be used for human consumption. So go look up Colby's Crew, COLBYSCREW. I vetted them carefully. They're a fabulous horse rescue organization, Colby's Crew.
Wow.
Finding good charities. Well, that's another part. I'm sure we're going to get to that, Richard.
Yeah.
One thing that is different for some people this year, or for many people actually, according to two surveys, one from Wells Fargo and one from LendingTree, is that some people are saying they just can't give as much to charity this year as they did last year because of inflation. So, it may be that your heart's in the right place, but your wallet may not be able to commit as much as you did before. I think I'm going to try to give a little bit more to charity this year if I can, because the stock market has been so good for the past year for
Great.
me and for a lot of people. And I feel like for those of us who've been fortunate enough to, profit from that, it may be easier for us in some ways to find some of that money and use it towards charity. Now, we talked about a lot of people giving their charitable donations in December. As Pam said, often that was because that was when people had to make their tax decisions. Any day is a good day to do it. A lot of people are going to be doing it on what's called Giving Tuesday. That's December 3rd this year, because that's when the charities are all on the march to try to get donations. I wrote an article about giving wisely to charity for Next Avenue, and I talked to a bunch of charity experts about how to give wisely. One of them was Stephanie Buckley. She heads philanthropic services at Wells Fargo. She said that too many people take what she calls a peanut butter approach to giving. I never heard that before. And what she means is that they don't have a philosophy or a discipline around how they're going to give. They just sort of spread it around like peanut butter, a little bit here, a little bit there. And that is not a great way to be thinking about charity. In fact, there was a Fidelity charitable survey that showed that nearly half of pre-retirees and retirees who have financial advisors have never had a conversation with them about charitable planning or giving. I was pretty surprised by that. Pam, are you surprised?
Look at my face in reaction to that. I'm going to tell you right now, if any of the advisors in my network, if anybody comes to me and says that their advisor doesn't even know them well enough to know how they want to donate to charity, and it's not a central part of their financial planning, and that's all part of really understanding what the client's all about, then that's not a financial advisor I would want to have anything to do with. I know that sounds harsh, but that's a really good point right there to say, does my advisor really know me? Does he really get me? That's really important. So we know that it's a really important piece. And I can tell you that a great financial advisor, an outstanding, exceptional financial advisor, is absolutely going to bring up the conversation with you. And even if you don't have a lot of wealth, they're going to care about asking you how do you like to donate? How do you feel about charitable donations? Let's make that part of our planning. And again, sometimes it might be with a really wealthy family that this is all big part of their tax saving strategy, if you will. But it's also for people that have very small amounts of money and they care about making sure that it's part of what they do.
And here's another context for the financial planner. And I know this because I just finished doing this myself. I continually revise my revocable living trust. And a lot of people really want to give to charity. They also balancing out, but what if I need the money myself? How long can I live and make my money last? So one of the key ingredients in your plan with your financial advisor is to say, well, let's see, I put money into 529 for my grandchild, so I've got that college gift, and if I'm lucky enough to live a long time and the stock market is up and still die with some what I will call extra money, you want to name a charity in your will for just a percentage of what's left after. So you can name one or two charities. And while you're having this discussion with your planner about your annual giving and the deductibility of it, or just what makes you feel good, you can think about what if there's extra money at the end? Because that's a surprise benefit to any charity that you really care about. And they don't have to know you. The money will be put to good use. A small amount, a contribution, it all adds up in America. $500 billion, really. A lot of it from just people.
All donations that add up.
And I do think if you have a financial advisor and the advisor isn't asking you about your charitable contributions, you should bring it up to them and say, well, this is what I'm thinking about. Here's how I'm planning to do it and when I'm planning to do it. And just see what they think, not for their advice about is it the right charity, more about is this the best way for me to give money to charity and the right time and things like that. So
yeah,
let's talk
you're a little bit more generous than I am. I'm a little more harsh. I say the advisor doesn't already know that about you and have it already in your thoughts and plans, like Terry just mentioned, then I'd say it's a yellow flag because it tells the advisor doesn't really take the time to know you.
All right. So let's talk a little bit more about how to get strategic in charitable giving and a little bit about how to save on taxes, because there are some ways people may be able to do it. So Stephanie Buckley, who I spoke with, she suggested creating what she calls your own personal giving spreadsheet. And by that, she means you list the names of all the charities you've assisted in each of the past 5 years, how much you've given to each of them during those years. And then you can kind of see, are you really giving to the causes that you care about most? You may actually be surprised that you're not. You thought you were being more generous or less generous than you actually are. There's a website called Giving Compass, and they have a free online giving planner tool that I looked at that I think is very helpful. And it helps you compare your giving to people like you. So if you're kind of wondering, gee, I wonder how much I should be giving and wonder what other people are doing, well, this will tell you what other people are doing. Then I think the next step is to think about, well, where do you want to make your donations? Who do you want to help and why? And the first thing to do there, I think, is to possibly, if you are doing what I'm doing, if you're doing some volunteering and you like that organization, think about seeing how you can be helpful to them and maybe making a charitable donation to that place. You know how it's run. Hopefully you like the way it's run. But then you can start researching charities by focusing on the missions that matter to you and then finding the efficient charities that are making an impact. So there are a few ways to do that. Fidelity Charitable has a good online booklet called Boost Your Giving IQ, and it lets you make a philanthropic mission statement and then start researching charities. And then once you start knowing a few charities that you think you might want to give to, then I think you do a little bit more research into them. You might call them, you could visit them if they're nearby, and you ask them questions like, what's your most successful program and why is that so? And where does most of your funding come from? And what are your most urgent needs? I think you want to really hear from them how they're doing what they're doing, and is that what you would want them to be doing and the way you would want them to be doing it. Before I get into some of the charity rating services, I just want to ask Terry and Pam, do you have any other advice on choosing a charity or researching charities? I know there's some really great charity rating services online. Charity Navigator is one. Charity Watch is another.
Yeah.
The Better Business Bureau has one called give.org. I wonder, Pam and Terry, any thoughts about those or any other way to research a charity?
Well, I mean, I know for me, I feel better when I know there's transparency and I can actually see where the donations are going. So I love these websites and the ability to actually see inside. So there's a lot of charity rating sites. We'll put them in our show notes so you guys can see them right there. Don't forget though, every nonprofit also files an IRS Form 990. That's a public document that you can find. It's a tax document that you can find online, or you can even ask the organization to email that to you directly if you really are involved and really want to know more about a particular charity. And I think that there's just so many online tools that help you see with it, like you said, Richard. I think the key is giving efficiently so you can see that the money is really being used. They've got to cover some administrative costs, obviously, but you want to see, a huge percentage going to the actual cause and not to all the administrative part.
Right.
That's really critical. I was a lot of what I was going to say. You can choose for charitynavigator.org, for example. If you don't know, but you want a charity that clean water, helping cats, whatever, a certain disease, you can sort and filter. But the value of the ratings is not just that they think they're good. Because of those Form 990s, they're talking about what percentage goes to salary, what percentage goes to overhead, what percentage is actually used and goes to the cause. And you will be shocked at the poor ratings that some well-known charities that advertise late at night on TV, save the your check and help save right now, send a check. They spend a lot of money on those commercials, and they also pay themselves, many of them, a lot of salaries. So it's worth, before you make any donation, large or small, to go to charitynavigator.org and
it might take you 5 minutes to find out 90% of everything you need to know.
So you can either look up a specific charity or say, help me find a charity that does this.
There are also charities that have similar sounding names, and I know some people end up thinking they're giving money to the charity they have in mind, but it turns out they're giving money to a charity that sounds like it, but is not the right one. So you really want to be sure you're giving to the one that you want to be giving to. Why don't we talk a little bit about taxes? Terry, you're the tax maven. I know you said that most people really, won't be putting taxes into their thinking for charitable
But
giving because they won't itemize, but
there's some
they could be doing
opportunities.
there's something called bunching charitable deductions. Maybe you could talk about that.
Well, let's start with this. Many of our audience might be in the stage where they have to take a required minimum distribution, and delightfully you're thinking, I don't want to take it out and pay the taxes on it. I don't need the money. I have my other savings. I have my pension, or I have whatever it is. But the government wants its money. Well, step one for some tax advice is you can directly distribute up to $100,000 in a year, and including your RMD. So if it was a 42,000 and you want to send 50,000 to one or two or three charities, you have to contact your IRA custodian right now before they get overwhelmed with these requests at the end of the year. And as long as it's a 501c3 and the custodian sends the check directly to the American Cancer Society, the XYZ charity, per your instructions, it can count as your RMD and then some. Okay, so it's something that you won't have to take out and pay taxes on and then see if you qualify for a deduction. You can just wipe out that RMD, the taxes on it, by making a direct contribution. That's number one. But on your own return, you're right, Richard, about this idea of bunching. You know that if you have enough deductions, it may pay anyway in 1 year to itemize. And again, this is something you'll discuss with your accountant. But if you were going to maybe give 6,000 or 7,000 to charity this year, maybe you wait and make that donation in January next year. And then at the end of next year, 2025, for your annual $6,000-7,000 donation, you do them both in the same year. Now you're getting up to the level where you might find that donation is a deduction on your tax return. You can, I'm trying to remember the numbers, you can donate on your tax return 60% of your adjusted gross income. Now, I don't know anybody who's given away more than half of their income, unless maybe you're extraordinarily wealthy. You're still
Elon Musk, hear me now.
Yeah, Elon Musk, exactly. Please donate. So, and so that's something you can consider with your accountant. The other thing is, a lot of people want to donate property. I mean, you see those commercials, donate your car, 1-800 Cars for Kids, or whatever it is. But you may have any kind of property that would have a value that you can establish. And this is very important. You have to have either an appraisal or a comparable sales, so forth. There's a whole IRS booklet on this. But if you want to donate, one year I donated my horse trailer. They gave me such lowball bids at the dealers. And I said, wait, comparables prices are this, the difference between the bid and ask, and donated it to a charity that really put it to good use, a horse rescue. But you have to be very careful about getting an appraisal for that property. And there are limits. You can only contribute in kind up to 30% of your adjusted gross income. So again, when some of the gifts you make are just because this is a great gift and I know I'm helping out. Some of them may be tax smart ways through your IRA distribution from the RMD, or doing charitable donations of property, but follow the IRS rules. Make sure you talk to your accountant about that.
Yeah.
One thing I would just add about bunching is might want to think about it even from the flip side of that, which is to say, maybe this is the year that you will bunch your deductions for charitable donations and give what you would have given this year and what you would have given next year. Give them both in December, and that way you'll be able to itemize on your 2024 return if you want to do it that way. So it's something to think about. Some people may find that it's useful to do that. And if you get over that itemized deduction threshold, then you may be able to get some other write-offs that you normally couldn't because you haven't itemized. Another thing is, some people like to donate stocks or mutual funds or ETFs that have appreciated in value, and there's a tax benefit for doing that too, right?
Yeah.
Yeah,
Go ahead.
go ahead, Pam.
No, we're going to get into the funds in a second.
That's the best way to do it. Look, if you don't, so you have something you bought a long time ago, you would sell it, you would have a capital gain. It's a low rate, but you can avoid that completely by donating it and taking a deduction for the current value. But
Right.
we're all anxious to talk about this. So Richard, I'll let you lead
Okay.
off the topic
Well,
of donor
yeah.
advised funds.
So the one way that more and more people are making donations of stocks, bonds, mutual funds is through what are called donor advised funds. They're available at all major financial services companies. And basically it's a way for you to say to the donor advised fund, here's the amount of money I want to go to charity. You don't even have to say where it's going to go, which particular charity, just that this amount of money is going to go. It's often the stocks or bonds or mutual funds that you've had profits from, and you're not going to be paying capital gains taxes on it, but you can get a tax deduction for what you're going to be making the donation for overall. And then you can decide whenever you want where you want that money to go. You might decide that right now, but you can decide that sometime in the future too. Pam, do you have any thoughts about donor advised funds?
Yeah, now we're getting into the land of, pretty much the wealthier individual, the wealthier family who has that caviar problem of, oh, I have to do charitable planning in conjunction with my tax planning. This is where a financial advisor might recommend to you, if you're in that category, where you're really going to be making chunky donations and you want to somehow kind of manage and organize it. These are called donor advised funds. You can set up a fund. Fidelity is huge in this. It's a separate it is a type of investment account that you set up, almost like you'd set up an IRA account or anything else. It's a certain specific account. Now, the minimum dollar amount to establish a donor advised fund is going to vary.
Places like Fidelity and Wealth and Schwab and Vanguard, many times they offer let people open a donor advised fund with $5,000 or $10,000.
Or 10,000.
Not like it was years ago. Yeah.
Think of it this way. If you were the Rockefellers, you'd create a foundation 100 years ago.
Exactly.
You have $50 million or $100 million, and it would be invested over the years. And there are requirements that you distribute a certain percentage every year. That's what the big family foundations do. A donor advised fund is creating your own foundation. You give an amount, maybe it's $10,000, $15,000, $25,000. You set up your own donor advised fund at Fidelity, the Smith Family Fund.
Right.
You're going to donate highly appreciated stock or just $50,000 or $25,000 and get the tax write-off this year.
Right.
The money continues. Let me just finish the description. The money continues to grow, tax deferred, and every year you say, and there's a certain minimum 5% that has to be distributed. Okay, we would like this year to send $3,000 to the American Cancer Society and $2,000 to XYZ 501c3 recognized charities. And you can get your kids involved, because once you've set up this fund, you can say, our family gives. So the money gets the deduction this year. It grows in an investment account at Fidelity, Vanguard, and then you make distributions down the road, but your tax deduction comes now.
Right. And that's immediate. Look, I think of a DAF, donor advised fund, as a family-driven account. There are fees involved, et cetera, et cetera. So yeah, somebody with 5 or 10,000 or 20,000 might do that, and it's great that they can. What I see most often is this is family-driven when there's quite a bit of money, and also you got to keep in mind that this donation is irrevocable. Okay, so it is aimed at who can afford to. Once you put that money in, that's it. You can't make that change. And you have to understand that, when you're really looking at this, when you have more money, because you want somebody to help you administer and manage this and control this account, because you're not going to have 100% control over, how the money is invested, et cetera. And the charitable entity is legally maintaining and operating it. This is why I think it's great that it's available for smaller, but I would say that really it's used as a vehicle for people who have quite a bit of money and can afford to make that irrevocable gift.
Okay, here's an update, a factual update. There is no minimum at the Fidelity Charitable Gift Fund, and your minimum grant amount is $50. And it has I'm looking at their website. It has a very lowest annual fee. And this is literally the way you can get your kids involved. because whether you said it, and by the way, just because you gave $10,000 this year and maybe, or enough to itemize maybe, or you had a bonus or whatever it was, you wanted to lower your tax bracket and itemize. There are a lot of reasons
Yeah,
that
it
you
is.
might want to lower your income in 1 year, but that doesn't mean that next year you couldn't also contribute another X thousand dollars to your private foundation, your Fidelity, in this case, Fidelity Charitable Gift Fund account. You just have to make distributions every year. And the minimum distribution, again, is $50. This is not just for the wealthy. It's a chance for, I've written about this for so many years. It's a chance for ordinary people to organize their charitable giving in a way that becomes impactful for the whole family.
Yep, it is family driven. I prefer to give directly. And then I just think of it as a great vehicle for people who really do need, they have enough to organize that they really need to get it organized. So,
And and you won't be surprised to learn that, of course, there are apps for this now because there are apps for everything. But when I was reporting my article, I found there's something called the DAF Pay app. That's DAFPAY. And then there's something called the Daffy app to use for donor advised funds. And what these often let you do is, let's say you want to be using your donor advised fund to help somebody who's running for Alzheimer's or the Susan B. Komen breast cancer walk, whatever it might be. You can use one of these apps and actually use the app to say, now I want X dollars in my donor advised fund to go to help this person, which you could never have done 2 years ago even. It's amazing.
Is it, Richard, for even if your fund is at Fidelity or Vanguard or whatever?
Yeah, it doesn't matter where you've got. Yeah, because that big charity has signed up with DAFPay or Daffy and said, yes, we will let people use the app to use their donor advised fund to contribute to us through that. So it's becoming easier than it used to be, and it's become a little more democratized than it used to be too. The one last other thing I would say about them is they can be really helpful from a record keeping standpoint, because once you start and set up a donor advised fund and you're giving money to it for multiple years, you can quickly see, well, how much did I give last year and where did it go and how's it doing? And then you get statements in the mail. A lot of people just can't keep track of where they've given their
that's a good point. That is a good point. Yep. Just look at the fees. Okay. And Terry, I'm glad that you said that they're de minimis, but just check out the fees on these apps. Okay.
Yeah, absolutely. Absolutely. Before I share the 3 final thoughts that I got from the experts that I talked to for my charity article, anything left that you want to talk about, Pam or Terry, that relates to giving wisely to charity?
No, I just think this is a great reminder to us and to everybody that this is part of our financial planning. And
Richard, I like something you said earlier, and I was thinking back when my son was little. Every year, I said I'm going to give as much to the community organization the virtual community chest, as I spend on presents for my child, because as a doting mother, of course, that was the big thing. Set a milestone for yourself so you think about charitable giving the way you think about any other budget category, something you really want to do and measure.
That's very great. That's a really smart point, Terry. Thank you. So I'll close with 3 final tips that I heard from the experts I talked to. First is, don't give reactively. They told me that some people only donate to a charity when they get a call. And that's usually from a telemarketer, and they're going to take some of the money so they can get paid. Not to say you should never give money that way, but usually it should be coming from where you want to give, not somebody calling you randomly and hoping that you're going to give. Second tip is, try to make your charitable contributions with a credit card and not by writing a check. Because if you decide later on it's not a good charity, or you find it, God forbid, it's a scam, the credit card company can try to get your money back, but you will not be able to get your money back if you use the debit card or use the check. And then the last thing, I talked to Michael Thatcher, who runs Charity Navigator, that rating service. He says, let your heart guide you into giving to charity, but then do a little analysis. So he says, follow your heart, use your head, and then go do something. I think that's pretty good advice.
I think it's great advice. Richard, Terry, let's make sure that we put everything that we've mentioned, including the fact that donor advised funds do have low minimums now, which
Mhm.
thank you, Terry and Richard. Let's put all that into the show notes
Sure.
because we've covered a lot. So anybody who is really looking for some good guidance here can find it in our show notes.
Which is at
Absolutely.
friendstalkmoney.org.
.org.
.org,
Don't
yes.
go to .com. Bad things will happen.
Friendstalkmoney.org. There are links to all the things we talk about and all our previous podcasts.
Thank you so much, everybody. See you soon. Bye-bye.
Bye now.
Friends Talk Money is funded in part by a grant from the Investor Protection Trust. The IPT is a nonprofit organization devoted to investor education. Since 1993, the IPT has worked with the states to provide the independent, objective investor education needed by all Americans to make informed investment decisions. Visit investorprotection.org. We also receive support from the North American Securities Administrators Association, known as NASA. It's the oldest international investor protection organization. NASA's members include state and provincial securities regulators from the U.S., Canada, and Mexico who serve on the front lines of investor protection. Recognizing that education and awareness are powerful tools in the fight against investment fraud, NASA is pleased to sponsor Friends Talk Money. Here are 3 important tips to help you protect your money from fraud. With investing, there are always risks, so be cautious of anybody telling you that a certain investment is guaranteed. You should also proceed with caution if somebody is promising very large investment returns. This is a common red flag for investment fraud. Last and most importantly, be sure you're working with a licensed or registered financial professional. You can check your advisor and make sure they're licensed by visiting brokercheck.finra.org. NASA is your partner in keeping you safe and helping you avoid investment frauds. Visit nasa.org and click on the Investor Education tab to learn more.